Hello everyone, welcome to Ammu's lecture room. Today we will discuss some MCQs on cost accounting. Let's see the first question. A method of costing applied where costs are collected and accumulated for each work order. Option A, process costing. Option B, contract costing. Option C, operating costing. And option D, job costing. The answer is option D, job costing. Now let's see job costing in detail. Job costing is a costing method used by companies to track and allocate costs to specific jobs or projects. It is commonly used in industries such as construction, manufacturing, and professional services where each job or project is unique and required individual cost tracking. Job costing involves identifying, accumulating, and allocating cost to specific unit of production, also known as jobs or projects. The cost elements included in job costing are direct material, direct labor, and overhead costs. Here, direct materials are the materials directly used in a particular job, and direct labor refers to labor cost associated with the specific job, and overhead costs include indirect material, indirect labor, and other indirect costs that are not directly trackable to a specific job. In job costing, the document which is used to record and accumulate all costs associated with a particular job is called job cost sheet. A job cost sheet is a document used to record and accumulate all costs associated with a particular job. It serves as a central record for tracking the direct and indirect costs incurred for each job. This cost sheet includes details such as job number, job description, direct material used, direct labor hour, overhead cost, and total job cost. To calculate the total cost of a job, the direct material, direct labor, and allocated over cost are added together. This job cost information is crucial for determining the profitability of an individual job and making informed pricing decisions. Okay, I think you got an idea about job costing. Now let's discuss the other options, the remaining options. First one is process costing. Process costing is a costing method used to determine the cost of producing identical or similar units of products through a continuous production process. It allocates cost to each production process or department rather than to individual products or jobs. This process costing is suitable for industries that produce large quantities of identical or similar products through a continuous flow of production, such as chemical manufacturing, oil refining, and food processing. In process costing, costs are accumulated by process or department rather than by individual product or job. Here, the production process is divided into sequential stages or department, and costs are allocated to each stage based on the resource consumed. In process costing, there is a cost called transferred in cost. This transferred in cost refers to the cost incurred in a previous department that are transferred to the next department as the production process progresses. These costs are added to the cost incurred in the current department to calculate the total cost per equivalent unit. While learning about process costing, we also need to know about joint products and byproducts. Production of an article may give rise to joint products or byproducts. Now let's see joint products and byproducts in detail. Joint products and byproducts are two concepts related to the production process, specifically in the industries where multiple products are derived from a common input or raw material. Both joint products and byproducts are output of a production process. They differ in the terms of their value, intended use, and economic significance. Here, joint products are two or more distinct products that are produced simultaneously from a single input or production process. These joint products have significant commercial value and they are the primary focus of the production process. These joint products are intentionally produced and are planned output of the production process. For example, in oil industry, crude oil can be processed into various products such as gasoline, that's petrol or diesel, and jet fuel, all of which are considered joint products. And byproducts are secondary or incidental products that are produced alongside the main product but have a relatively lower value or economic significance. When compared with the main product, these byproducts have limited commercial value and are often considered complementary to the primary output. For example, in the meat processing industry, products like bone, blood, and animal fat can be considered byproduct as they have lower value compared to the primary meat products. Next one is contract costing. Contract costing is a costing method used to track and allocate cost for long-term projects or contracts that are undertaken by the company. It is commonly used in industries such as construction, engineering, and infrastructure development. A document used in this contract costing is contract cost sheet. It's a sheet used to record and accumulate all costs associated with the specific contract. This contract cost sheet serves as a central record for tracking the direct and indirect cost incurred for each contract, and it includes details such as contract number, contract description, direct material used, direct labor hour, subcontract cost, overhead cost, and total contract cost. In this contract costing, the person who give the work on contract is known as contractee. Now let's see few terms that's related with contract costing. First one is subcontract. Subcontract refers to an agreement between a contractor and a third party, where the third party is known as the subcontractor. He agrees to perform a specific portion of the work or provide certain service as part of a large project. Next term is cost plus contract. When the contractee agrees to pay the cost of work done plus certain percentage of it towards establishment expense and profit, it is called cost plus contract. Next term is work in progress. Work in the process of completion is known as work in progress. Next one is notional profit. The profit on incomplete contract is known as notional profit. Next term is work certified. The value of work done to the satisfaction of contractee is known as work certified, and the portion of the work not satisfied by the contractee is known as work uncertified. Next term is escalation clause. It is a provision for increase in the contract price to accommodate increase in material and labor clause. The opposite of this escalation clause is de-escalation clause. Next one is operating costing. This operating costing is a costing method used to determine the cost of providing services or operating a specific department or function within a company. It is commonly used in service-oriented industries such as transportation, healthcare, hospitality, and telecommunication. It focuses on determining the cost of providing services or carrying out specific activity rather than the cost of manufacturing products. Now let's move on to the next question. The method of costing applied when articles are manufactured in definite batches. Option A, absorption costing. Option B, service costing. Option C, multiple costing. Option D, batch costing. Here the answer is batch costing. Batch costing is the method of costing applied when articles are manufactured in definite batches. Now let's see batch costing in detail. Along with that, we will discuss the other options also, that's absorption costing, service costing, and multiple costing. Okay, first let's see batch costing. Batch costing is a costing method used to determine the cost of a batch or group of identical or similar products. It is commonly used in manufacturing environment where the products are produced in batch rather than on continuous or individual basis. The batch costing focuses on determining the cost of producing a batch rather than the cost of producing individual unit. Here, a batch in a batch costing refers to the group of identical or similar products that are produced together. The size of a batch can vary depending on the production process, capacity, and market demand. And the cost incurred during the production of the batch are allocated to the products within the batch. Batch costing is an extension of job costing. In batch costing, the unit is batch. And in batch costing, production is made for stock in anticipation of demand. In batch costing, in order to reduce the cost, there is EBQ. EBQ means economic batch quantity. It is the number of units to be produced in a particular batch to be most economical or to be at the lowest cost. The equation for economic batch quantity is root of 2DS divided by IC. Here D stands for annual demand for the component, S stands for setting up cost, I annual rate of return, C unit cost of production. Now let's discuss the other options. First one is absorption costing. It is a costing method that assigns all manufacturing costs including direct material, direct labor and both variable and fixed overhead costs to the cost of a product. This absorption costing aims to capture the full cost of production by including both variable and fixed cost in a product's cost. This absorption costing is not suitable for short-term decision making or when significant fluctuation in production occurs. In both these situations, absorption costing is not suitable. Next one is service costing. Service costing is a method used to determine the cost of providing services. It involves identifying and allocating cost specifically relating to delivering a particular service. And service costing focuses on allocating cost directly to individual services based on the resources consumed or utilized during the provision of those services. For example, in a consulting firm, service costing may be used to determine the cost of providing specific consulting services, taking into account the hours spent by the consultant, material used, and any additional cost directly associated with the service. Next one is multiple costing. Multiple costing is an approach that involves assigning cost to products or services by considering multiple cost drivers or factors that contribute to the overall cost. This multiple costing takes into account various cost drivers that can include different factors such as labor, material, machine usage, or other cost related measures. In a manufacturing company, multiple costing may involve allocating cost based on factors such as direct labor hour, machine hour, raw material usage, or other cost drivers to determine the cost of producing various products. Okay, now let's move on to the third question. Unavoidable loss inherited in the material. Option A, normal loss. Option B, abnormal loss. Option C, accidental loss. Option D, spoilage. Option E, scrap. Option F, defective. And the answer is normal loss. Normal loss is the unavoidable loss inherited in the material. Now let's see all these options in detail. First one is normal loss. Normal loss refers to the unavoidable loss or waste that occur during the production process due to factors such as evaporation, shrinkage, or inherited inefficiency. Normal loss is an expected loss that occur under normal operating condition and is accounted for as a part of the production cost. Next one is abnormal loss. Abnormal loss refers to the loss or waste that occurs unexpectedly or abnormally due to factors such as machinery breakdown, accident, or other unforeseen events. It is considered as a deviation from the normal expected loss and is typically not accounted for as a part of the production cost. Next one is accidental loss. Accidental loss refers to the loss or waste that occur due to accidental events or circumstances beyond control, such as fire, theft, or natural disasters. These losses are not inherited to the production process and they are typically treated separately from normal or abnormal losses. Next one is spoilage. Spoilage refers to the loss or deterioration of raw material, work in progress, or finished good during the production process or storage. It occurs due to the factors such as inadequate storage condition, expiration of shelf life, or product defect. Spoilage is often considered as a part of the production cost and is accounted for separately. Next one is scrap. Scrap refers to the material or product that is considered as a waste or unsuitable during the production process but still have some residual value. It may result from production defect, excess material, or change in production design. Scrap is often sold or disposed of, and the proceeds or cost associated with it are accounted for separately. Next one is defective. Defective refers to the products or material that do not meet the quality standard or specification set up by the company. Defective items are identified during the quality control process and are typically segregated or repaired separately. The cost associated with defective items may include rework, repair, or scrapping. Okay, that's all for today. I hope this video is helpful. If you think this video is helpful, please do like and share the video. And if you have any suggestions, please mention in the comment box. Thank you.